Alrighty, cool. So let's go ahead and get started as we have more people coming in. Let's start off quickly with the fundamentals, and then that'll take us right into the news release, and that's what we're going to be trading today. So the US has already provided a ton of military aid to Ukraine, and it seems like we're getting ready to help out with more military aid. So far, the Biden administration is preparing a military assistance package of roughly $750 million for Ukraine and its battle against Russian invaders. Quick little update from what we have seen in the past couple of weeks is that there's no sense of pulling back whatever from the Russian military. If anything, they're starting to look to invade other parts of Ukraine now. And that's just feeding into that sentiment of we're going to continue to see this war, continuing on, and that is just creating more market fear and more market uncertainty. So that's what we're trading pretty much, again, for the next couple of weeks until this war is over. And in addition to Russia and Ukraine, you also have China and Taiwan, which we're going to get into just a little bit in the next article here. So from a geopolitical side, we're just seeing things kind of tensions ramping up, and the markets are starting to price that in slowly as well. And the current administration is kind of playing that front role by providing all this assistance in the war to Ukraine. And then we also have sanctions, and we have a lot of other countries stepping in and placing sanctions as well. And this move comes as the Russian president vowed to continue pursuing the war, and Biden accused him of committing genocide. So this statement right here is pretty much what the markets are trying to price in at the moment, and that's what's pushing this market fear and this market uncertainty. So far, the U.S. has provided more than $2.4 billion in military assistance to Ukraine, and we're going to continue to provide more assistance, around millions of dollars right now as we're preparing for it, and in the future it could be more as the war continues. Any questions on this before we go ahead and continue on? As you continue down, you can kind of read into more details, but I just want to give you guys quick summaries.
No, okay.
Okay, cool. And then here, Yellen to warn governments against undermining Russia's sanctions as we continue down here. So what she has said so far, not just in this article, but in the last couple of weeks, is that with Russia, or not Russia, but with China and Taiwan, she has also kind of in a way threatened to place more sanctions if China were to move in and invade Taiwan. And she has said that, hey, we've done this with Russia and Ukraine before, so this should kind of be the proof that we will do it again and we're not afraid to do it again. So on Wednesday, she's going to warn governments sitting on the fence over the international effort to punish Russia over its invasion of Ukraine that any moves to undermine sanctions would draw the ire of U.S. and its allies. Pretty much saying that if the war continues on, then don't be surprised if we continue placing sanctions, and don't be surprised if we continue taking other steps, which is going to hurt the Russian economy, which we have seen happen already in the past couple of weeks. So that is something that to watch out for as her speech comes out. And the market is obviously going to price that in as well. As you continue down here, you'll start to see some more details and pretty much what has already happened so far, and what she's saying that, the U.S. is not going to be afraid to do. But for the most part, that's what the summary is here. Overall, when it comes to macro fundamentals, there's a ton of market fear, market uncertainty, and that's what we're pretty much trading when it comes to safe haven currencies and commodities gaining strength. Now, as we go into interest rate news coming out for the Eurozone, ECB's president plays down concerns about Eurozone stagflation. So this is the same thing that we're seeing across a lot of different countries, not just the Eurozone in general, but United States and UK and a lot of other countries, where there's a concern about this stagflation, where we have this high inflation, but we also don't have enough economic growth to continue pushing high interest rates either. So you could continue pushing interest rates, but at one point your consumers do get very uncomfortable, and the markets can start to price that in, as we saw happen with Bank of England recently. And then there's talks about the Fed also increasing interest rates by half a basis point if needed. So we're sitting already at half a basis point right now, and increasing it by another half basis point if need be by next month. But the key thing is, again, how are the consumers going to react to that, and then the investors also, the investor sentiment. And the ECB is pretty much saying that we're not going to be increasing interest rates because our economy is not sitting there. So this sense of the stagflation. So as you guys are getting closer to the ECB interest rates coming out, this is one thing that you guys want to pay attention to. So it seems like they're going to continue on this sentiment of not increasing interest rates for some time just yet. Any questions on these articles before we move on to the economic calendar?
No questions.
Okay, cool. So far, let's do a quick recap going into today. So far, quite an easy start to the week on Sunday. Monday, same thing. Yesterday, we had things picking up a little bit where we had CPI coming out. So this is inflation from the consumer's perspective. And we did hit that forecast number, which means that the inflation did increase, prices did increase from the consumer side. So now we're starting to see the massive PPI numbers that we have been seeing in the past couple of weeks. So we are starting to see those costs from the producer side now being pushed onto the retail side and now onto the consumer side. So we are starting to see those costs being pushed. And then you had CPI coming out from the UK as well, last London session. And then today we have PPI coming out, and this is going to be inflation from the producer side. So we are forecast to see some more increases, but if we stay below this number, that would pretty much mean that the inflation is kind of calming down from the producer side. So that means that less costs are going to be passed down to the retail side and to the consumer side. But if we start hitting 1.1% or higher than that, then that does mean that we are starting to see higher costs compared to the previous, which is obviously not a good thing for the consumers, because this means that the producers are eating up still a lot of costs which have yet to be passed down. And then if you're trading the USD CAD or any other Canadian dollar pair, then you have interest rates coming out. This is what you guys want to be paying a little bit more attention to. And then you have the press conference, so pay attention to their rate statement and also pay attention to the press conference. So this will give you guys the outlook of what to expect when it comes to the Canadian dollar. And then not much coming out in Asian session unless you're trading the Australian dollar. Then you have the unemployment rate, which you guys could trade. But other than that, quite an easy rest of the New York session, Asian session. Going into London on Thursday, so tomorrow is when you have the interest rates coming out from the euro. So that's when this article is what you guys want to be paying attention to. And it seems like they're going to maintain the interest rates here as well. So same thing. This is pretty much going to give you a nice little outlook of what the ECB is kind of looking into, but you still want to pay attention to their monetary policy statement, and that will give you a little bit more details, and their press conference. And then tomorrow we're going to be trading the core retail sales. So yesterday was CPI, today is going to be PPI, tomorrow is going to be retail sales, and then after that you just end out the week quite easy since there's a lot of bank holidays. Everyone good on the fundamental side?
Yeah.
Perfect. So as we wait for PPI to come out, let's just break down some of these levels. So remember, if you guys are looking at any trade opportunities right now, that this is the last couple of minutes before news is supposed to come out. So expect some volatility, expect a little bit of consolidation. This is all market sentiment and fundamental trading going on right now. So essentially what I mean by that is this is all the people who are trading right now, placing trades, forecast versus previous. So they are expecting, higher PPI numbers. So you are going to see a little bit of more strength when it comes to things like gold or GJ kind of weakening a little bit because the yen is gaining strength. This is, if this number comes out higher than previous, or whatever we have forecasted, it's not a good thing for the US, right? Because that means that the inflation is increasing. It's only good when you're sitting in some sort of economic growth. When you're kind of sitting in this declining economy in a way, it's not a good thing because costs are increasing for consumers. Consumers are already conservative, and you have interest rates that are increasing, which we're not seeing the consumers react kind of well to. Because in other parts of the economy, you are starting to see some of these numbers increasing of people defaulting already. So let's start off here on the quarterly time frame. We're already coming up, filling up this wick, which we had targeted in the beginning of the week. So if you guys are looking at the weekly outlook, you guys should already have enough opportunities to cash this trade up, coming up to 164,700. So as you drop down to lower time frames, just remember that this is a quarterly top wick rejection. So if you're going to look for any sort of entries for more buy opportunities, you want to see price giving you nice breaks and retests above this area at a minimum on the hourly time frame. So that 5 minute, 1 minute break and retest above this, it's not going to work if you're trying to hold on to your trade. Next area that I'm going to mark off would be right here, which is that resistance area. And if price were to break below this, let's say 158,600 area, then this quarterly time frame would also be flipping bearish, and then you can look for potential trade opportunities coming back down into this minor resistance. But we can discuss some of those target areas once price does end up breaking below 158,600. So from a fundamental side, for you to see this on higher time frames, you would need to see the pound weakening, the yen gaining strength, and that's going to happen as there is more market fear and market uncertainty, and investors will be moving into safe haven currencies and commodities again. So right now we're still pushing up into these areas. We're still trying to come up and tap into some of these key areas. So we want to see, can price hold on to some of these resistance areas or finally break above it, or are we going to come right back down into 158,600? So on the monthly time frame, those are the two levels I would still have marked off from the quarterly. Is there any other level that you guys would like to mark off here? Alright, cool. So now we come on to the weekly time frame. As price broke above this 158,600, which is all this consolidation, we got a nice little break and retest. Last week we closed bullish. This week we made that little bit of a bottom wick, flip back up, and now price is still continuing. So we still have this entire move up that we can still catch as scalps turned into day trades, potentially even swing trades. It's only Wednesday right now for about 100 pips. You can look to the left, any other areas of interest. So if anything, I would probably mark this area off right here to kind of, let's see, there you go. So that area right there. So if this candle were to flip, come back down, you would be, this candle would be flipping bearish, and then you can look for those sells coming down to 158,600. Anything above this, I would still be looking for buy opportunities. Come on to the daily time frame. So in the beginning of the week, or even last week actually, Friday, we closed above this area. You got that little bearish candle close. This week we started off quite bullish. Even today you're getting a nice little break and retest. So if you want to narrow into your price action, I would mark off this area right here. So it starts to get like a lot of lines, I understand, but you guys can modify these levels according to whatever style of your trading. So whether you're swing trading, scalping, or anything like that. So on the daily time frame, I would want to see some form of break and retest on the 4-hour or even the hourly time frame forming here. So then we have enough confidence and enough volume to continue pushing up to 164,700. If we don't see that, if we just see a bullish volume like this on even on lower time frames without any sort of correction, then that gives me enough confidence that price will tap into 164,700, exhaust out since that is a higher time frame level, and then we could see pullbacks happening from that point. Yeah, so on the 4-hour time frame, we try to break above it once, and then we pulled right back down, created a support. So this is your higher low, and then we broke above it again, in the next 36 minutes, you're going to have this 4-hour candle close here. So what I want to see is this candle closing bearish, the next one creating some sort of a bottom wick and then flipping back up bullish. As that happens, then we can look for potential buy opportunities. But if the following candle comes right back down and we end up closing in this area, then we don't have any more buy opportunities. If anything, I would look for sells below this little support that we have forming. But same thing, either way, I want to see break and retest on the hourly time frame to confirm any of those entries. So if you're going to look for a sell, you have about 100 pips, 106 pips or so, depending on your entry, coming back down into this area to grab more liquidity. And this is a zone that we had marked off from the weekly time frame. So if this if the following candles just continue pushing down below this zone, then you will see the weekly and the daily and the monthly and all of that kind of pushing right back down to 158,600, and that's what we would be targeting. But the key level here again is this little zone to see how price reacts off of that. Are we just going to end up grabbing liquidity to continue push back up if we're looking for any sort of sells? And then we can look for those buy opportunities coming back up to 164,700. Or are we going to end up respecting 163,400 as a support here in the next couple of candles and then seeing a push back up to 164,700? And then we come here onto the hourly time frame. So if you want to create like another zone, so this would be my no trade zone. So I would want to see price first respecting this, closing here, and then continuing back up if I'm going to look for any sort of trade. But specifically, actually, this entire area is going to be my no trade zone. So this is where I would look for price to break out of this zone, respect it as resistance or support, and then look for entries. I would not be looking for any sort of impulsive trade or anything like that. As soon as price breaks below this level, I want to see price clearing out all of this consolidation and then look for potential trades. Does that make sense?
Yeah.
All right, awesome. Let's go on to the 30, which is going to close here in 4 minutes. So let's see if we can close bullish, and then as the next candle breaks the high and we continue pushing, then we can look for some potential scalp opportunities. But if the following candle kind of just breaks the lows and the highs, I would not be looking for an entry on that. So I never take an entry on a candle that breaks the lows and the highs. I rather just wait for cleaner candles. And you would do the same thing on the 15 minutes. On the 15 minute, you're already kind of holding on to some sort of a support. So I would just wait for the next 3 minutes, wait for this candle to close, and then wait for the following candles to continue. So if it's a little bit more clear, I could still leave this zone on here for you guys. Any questions on GJ before we move on to gold? Cool. So let's just quickly do the same thing here on gold. So I'm still going to mark off this area of resistance, 1900 flat. And then I'm going to mark off this resistance here, because once you break above this, then clearly you're going to come up for this wick fill. So let's just do 1980-400, which is that resistance on the monthly. So as price approaches any of these levels, essentially these are quick scalp opportunities. For swings, you would need price to break either of these levels, and then you can look for those potential swing trade opportunities. So on the weekly time frame, we've seen consolidation here in the past in 2020, and that's kind of the levels that we're sitting in. But the good thing here is that we're still holding on to a support, which is what we need to see happening, right? So price holding on to a support. Last weekly candle closed bullish with a ton of volume, no top wick at all. This new candle made a little bit of a bottom wick, push back up. It's reacting off of that 1980-400 level. So if we are to look for those continued buy opportunities, then we would need price to break above 1980-400, and then we can look for potential moves going into the next following week, coming up and filling this wick here. Come on to the daily time frame. So specifically, you have broken out of a consolidation here. Give me 1 second. Right here. So we broke out of all this consolidation here, and we maintained a bullish volume, came up, reacted off of this 1980-400 area. So what I want to see now is is price going to come back, try to correct this bullish volume that we have seen in the last couple of days, and then continue back up. That's where we would get that volume to finally break past 19,8400, come back into these areas, and we can target this. Or are we just going to react off of this and then continue pushing back down, potentially into this area of 1900 to grab some more orders, and then maybe come back up to 19,8400 and then target these levels up top here again. Come on to the 4 hour, so same thing, price reacting off this area here again. So if you're going to look for any sort of sell opportunities here for in day trades or scalps, and then this is also a big enough range if you're going to look for some trades to hold on to until the end of the week. You want to see price closing bearish here, so you want to see a bearish candle close, and then you can catch some quick scalp opportunities as price starts to break the lows. So let's say around here, around 72 pips or so, and then you can hold on to that as price continues pushing down for the rest of the week, as it continues to push down for the rest of the week for around 200 pips depending on your entry. But if we end up closing bullish here, the next candle kind of reacts off of this, and then we end up finally breaking above 19,8400, then you have some potential buy opportunity setting up for you. The key level that I would mark off here for any sort of sells is going to be right around this. So that's your support area, which has been held onto as resistance in the past, and then also reacted off as support, resistance, and then the further back you go, the more confirmations you'll get at this level. So let's just mark this off as that 600 level. And then you have those sells coming down, and then you can use your daily time frame to kind of target where is price going to go next. This is me narrowing in into that price action, so I know that this is that consolidation resistance that has yet to be respected as support. So that could be your entire trade range right here if you're looking to hold on to any sort of sells as they happen. You come onto the hourly time frame. We already broke the highs and the lows on this hourly time frame candle, so I'm not looking for any sort of trades here. I would need price to continue pushing down below this area, and then we would see some nice moves. I'm not looking for any sort of I would personally stay out of this little area here where you see all this little consolidation that's forming. I would just hop up to the 4 hour time frame, wait for price to break below these areas, and then look for those sells. Anything in between, I would just kind of wait it out. Any questions?
No.
Good.
All right. All right, we got a higher number than forecast and the previous, so I would expect to see gold and the yen gaining some strength here. So this is where you guys can drop down to the 5-minute time frame if you're trading CPI or PPI, interest rates, anything like that. Anyone have any questions at all?
Nope.
I'm not buying gold until it breaks above 1984 or 19,400. I'm not trading in this range here. All right. Yo, what's up, Eddie? Let's go back to GJ. Alright, seems like we're holding on to a little resistance, failed to break the previous highs. If anything, came back and retested. So wait for this little zone to be broken so you guys have a little bit of a bigger range to trade. So that means first off, start it off as like a very quick scalp, which is going to be your 12 pips or so, and then you can hold on to it for around 50 pips. If you're going to look for any sort of sells, if we just end up consolidating, then I would just stay out of the market for GJ, at least for today. And then as you start to drop down to lower time frames, we tend to see like some choppier price action. So you just hop back up to the hourly, 4-hour time frames, get a cleaner picture there, and then you have some good trade opportunities that you guys can look into. Yeah, so we're kind of just sitting in this little range. Okay, cool. Do any of you guys still have your trades running from yesterday from CPI?
My runner got stopped out.
Did you trail your stop loss before you did?
Mm-hmm.
Okay, cool stuff. And then you didn't trade London last night, did you?
I woke up for it, but I didn't end up taking a trade now.
Okay.
I was up. The GBP data actually came out a lot worse than expected. Well, obviously better in terms of Forex factory, but the inflation was higher. But I think at the time, some statements were released by the Bank of Japan. I think his name's Kuroda.
Mm-hmm.
He said something, and I think that's what caused GJ to go the other way. I was expecting some sells, to be fair.
Yeah.
Yeah, just
This move?
the one before where it went up. Yeah,
Oh, right
there.
here.
Yeah, that
Oh.
was London for me.
What I'm looking into for the next couple of weeks or so is just price breaking above some of these key areas so we can continue pushing. And then we have
Hmm.
like potential, around 200, 300 pip trades that we can set up for. So like any sort of buys when you're looking at GJ here, for example. If I were to break this down a bit more, price just holding on to the support, and then finally we break above that as price, and that's your little, all of this is your entire range. That's happened since like 2017, right? And
Hmm.
then we finally broke above it. So what I want to see is, can we end up breaking above all this area here as well, and then come back and target right up top here, and then maybe even some of these highs that happened back in 2015. But for that to happen, we need some great fundamentals to support this move,
Yeah.
right? So this entire move up got like a 800 pip move on the monthly, so that means like holding on to for like a couple of months. But when you drop down to like lower time frames, the daily and the weekly, then you have like 200, 300 pip moves that we can catch. So that's why I'm being a little bit more patient with the trades to see, are we going to end up reacting off of these levels, because either way
Yeah.
I think there's a couple of hundred pips that we could catch.
To be fair, that's what I was sort of waiting for to see how we react when we get closer towards 164, 700.
Mm-hmm. So meanwhile we could catch some of these scalps, or even scalps turn into day trades or even like quick swings.
Mm.
But for some of those longer term trades, because I think we're setting up really nice, especially this quarter.
Yeah, I mean the yen itself is just weakening.
Mm-hmm. It's also because Japan's economy as itself is not strong right
Yeah,
now,
yeah,
right? But the yen is also a safe haven currency. So yeah, it could gain strength when, for the most part, I think right now it's been like, what, 7, 8 weeks since the war has been going on. So the
hmm,
markets are kind of, I wouldn't say like over it, but we've seen, attacks going on. We've seen NATO allies coming in saying like, hey, let's try to get like some sort of a peace deal, but Putin's not interested at all.
yeah,
And so we know that the war is going to continue on. So as the markets start to price all this stuff in, I don't think we're going to continue to see like those massive movements that we saw back in like February when we started to see those news about attacks. Remember like that massive push up in gold that we saw, or like drops in GJ? But as we start to see things escalating more, then I think that's when we're going to start to see more pushes for the safe haven currencies and commodities.
yeah.
But
In
that's really
terms of
the
like
only catalyst that why the yen would be gaining strength.
more attacks and more chemical attacks and stuff like that, probably fuel
Yeah,
that strength, right?
yeah. And then pair that with the stagflation news that we're
Yeah,
getting.
yeah,
Pair that with if interest rates continue to increase in the UK, in the US, some of these bigger economies, and the consumers are not comfortable with it, then do we risk another recession? Which I don't think is going to happen, at least for some time now. But if we do end up just increasing interest rates and the consumers are not comfortable with it and we do it a few times, then yeah, we could risk something like that.
hmm,
So this is usually why I just come onto the charts and kind of just spend only an hour, even in the mornings. And it's because you can usually tell, like around these high volume times, where the market is going, where it's moving. So as of right now, again, these are some key areas that we marked off from the higher time frames, right? From the daily levels, from your weekly levels, and all of that. So as prices approaching these levels, we are starting to see a little bit of consolidation. So it's very important to just be patient, wait for price to break out of these levels, so then you guys can look for trades that are not just 10-15 pips, but you could grab those 10-15 pips, take your partials, and then kind of let everything else risk free and help have that kind of grow your account in the background while you're just, going out and doing whatever you need to do. And the trades are running risk free. Yeah, above 1980. Yeah, we do have good moves, so we just need to wait for price to break above this. And then, even based off the daily time frame, if you were to place your TP, you got like 150 pips that you could target. And then around 700 pips. Which is not something crazy because price has done that previously. So you had those all-time highs, we came back and tapped into them.
I think we may get that push with NYSE.
Yeah. And then from the US side, there's not anything else coming out, but we have interest rates from Canada coming out. And then the press conference. And that's pretty much it for this session. But tomorrow is going to be fun because 15 minutes before New York opens up, you have the interest rates, and then 30 minutes in, you have retail sales and the press conference. So tomorrow is going to be technically our last trading day for the week. Another way that I kind of find out if I'm going to actually end up having a trade that day or not, just coming onto the charts for like quick 15, even 30 minutes, is I come onto these higher time frames, like the hourly or even, let's say, the 4-hour time frame. But hourly and 30-minute usually work the most accurate, is if price is just ranging in its own little candle range right here. So here, for example, we didn't really break below this in the past like 30 minutes or so. 44 minutes now. And so I know that we're probably just going to end up ranging here for this, whatever my trading time is, which is usually until 6 a.m. PST, which is right when the New York Stock Exchange opens up. And then what I would do at that time is just place some alerts. And then whenever price does end up hitting that, if it does end up following like 2 hours or so like from 6 a.m. PST to 8 a.m. PST, which is usually the high volume time. If it hits, then I'll come back and take a look at if there's any opportunities. But if it doesn't, then I kind of just go about my day and then wait for price to break those levels or come back in Asian session when I'm doing the trade breakdowns. Then I'll reevaluate the levels to see what price is doing and if there's any like quick scalp opportunities as the new levels form. But like right now, at least for the next 15 minutes, we're probably not going to get anything. And then that's for gold. So with GJ, we're holding on to a support. We're pushing. We're trying to break the highs. So I do think that we do have the potential to continue moving up. But as these new levels are forming, if I were to break it down a bit more, just wait for price to break above this as New York Stock Exchange opens up in the next 15 minutes, and then you have that trade opportunity and you can ultimately target this. So that 15-minute just closed bullish, right? We still rejected this area, so as price is pushing up, you have a potential trade opportunity. I would just wait for price to break this previous high, and then as it pulls back and kind of fluctuates into these areas, that's your trade opportunity. So that's the way that I would take this trade. So you already have a support forming here. Wait for that volume to continue pushing, break the previous highs, and then see how it kind of fluctuates back, leaving that top wick. So that's how you would take your trade. And then you can place your stop loss, if you're comfortable, based off the 30-minute time frame. So let's say you break this 30-minute high right here, and then you take an entry. You could have a stop loss from like 13 pips, if you're comfortable, something a little bit wider, and then target around 30 pips or so. Does that make sense?
Yep.
Cool. So we're taking that volume, we break that high as price kind of fluctuates back. That's your trade opportunity. So this is like a 1% risk. 163,725. So I'm going to keep the stop loss here. Let's check the different time frames real quick. So you could start off with a 1-to-1, and then as price breaks these highs, which is going to be the 4-hour high, then you could increase that TP and be risk-free in your trade. But the key thing here to note is that this 4-hour candle is going to close in 11 minutes. So you also have to account for the following candle to make any bottom wick rejections. So if you're not comfortable with the trade right now, you wouldn't take this. What you would do instead is, let me remove this real quick just to explain to you guys. What you would do instead is wait for this candle to close, and then the new candle will start forming, wait for it to make some sort of bottom wick rejections into this area, and then it flips. That's how you would take that trade. So if I were to draw it out, wait for this candle to close, the next one to make some sort of a bottom wick, establish some sort of a support on the 30-minute time frame, 15-minute time frames as the New York Stock Exchange opens up. And then as it pushes back up, that's how you would take that trade. And then you would place your stop loss right into this area. Same thing, your entry ideally would be somewhere around this. Your partials could be as price breaks these highs, so you should be around like 20-30 pips into profit already, or if your entry is a little bit higher than that, then right around that area. So it's not, really that big of a difference. And then you would move to break even. That's how you start off, and then let the rest of the trade continue. Once you're around 50 pips into profit, trail your stop loss around 10 pips into profit, and then let everything else run to 164,700. But I would for sure take profits or take partials at this level or as price breaks these wicks right here. And then by that time, this hourly candle would have closed bullish. The next candle, same thing. Right here. So let's say it closes bullish, even if it's below this area right here, right? If it closes bullish like this, the next one makes a bottom wick and breaks the high. Let's say it closes exactly like this, and the next candle makes that bottom wick and breaks the high. Your entry would be right here. And then your stop loss right here. Take your partials around this area and then let everything else run. So let's say your entry is somewhere around this. You would take your partials around 27, 30 pips, wherever, depending on your entry, right? And then let everything else run. Make sense?
Yeah, I'm pretty much looking for that myself.
Sorry, Vijay, I missed that. My connection went dark. Could you explain the logic behind that entry again, please?
Yeah, the 4 hour or the 1 hour or both?
Both.
Okay. So on the 4 hour time frame, we need our last 4 hour candle closed above this. That's exactly what we needed. You wait for the current 4 hour candle to close bearish. So can you guys see the candles clearly? Do you want me to zoom in a bit? Alright, there you go.
That's it.
So you wait for the current 4 hour candle to close, which is going to close in like about 8 minutes. Then you wait for the next 4 hour candle to make some sort of a support, and then continue pushing up. And then as it breaks these highs, your partials would be, let's say, right into these areas, which is exactly where you're getting these wick rejections. And then as you pass up this area, you're about like, let's say 50 pips into profit. You trail your stop loss about 10 pips in, and then let everything else run to 164,700. And then your stop loss would be somewhere down here. So in order for us to see some sort of a bottom wick here, or like a support being formed here, that's when we drop down to the hourly time frame to see some of those cleaner moves. So on the hourly time frame, what we have is this current candle closing bullish, right? So this current candle is the one that's giving us that bottom wick that we see right now on the 4 hour time frame. So we wait for this candle to close. Let's say it closes how it is. You wait for the next candle to make that bottom wick, which is going to be the first hourly candle of the next 4 hour candle. And then that's what's going to give you that bottom wick on the 4 hour. And then you wait for that candle to flip bullish and continue pushing. As that happens and it breaks these previous highs right here, that's your entry, and then your stop loss could be right below this or even here, either of those. But depending on your entry, you should be around like 30 pips, 20 to 30 pips into profit. Take your partials, and then as price continues moving from there, then you move to break even first, and then 50 pips into profit, and then you move trail your stop loss 10 pips into profit, and then let everything else run to 164,700.
Okay.
Make sense?
Yeah. Okay.
Yeah. And then when the New York Stock Exchange opens up, which is in 7 minutes, you wait for the market to kind of price in that volatility that usually happens. So on the 30-minute time frame, that's going to look like this candle closing here. Maybe the next candle gives you some form of break and retest. So the first 30 minutes of New York Stock Exchange, let's say this candle closes like this, the following candle gives you some form of break and retest here, or we end up getting like volume. Ideally, your break and retest should be somewhere above this area with like some bottom wicks and some top wicks, and then the following candle takes you back up bullish. So on the 30-minute, 15-minute, between 6 a.m. PST, which is your New York Stock Exchange open around 9 a.m. Eastern Time, and around 11, you want to see that break and retest, at least on the 30-minute time frame or the 15-minute time frame. And then obviously all of this would be that 4-hour break and retest that we saw, and that should give you enough confirmation that your trade's going to continue running. Make sense?
Yeah. Do you ever use just the bottom wick as a break and retest confirmation?
Yeah, when there's high volume in the market. So right when CPI comes out, right when PPI comes out, so right now the PPI has already been out for like 24 minutes. So now that bottom wick rejection wouldn't count. Or when there's New York and London overlap, so right when the New York market opens up, or right when the New York Stock Exchange opens up.
Okay.
But other than that, I wouldn't look for a bottom wick rejection, at least on the 15 and 30-minute time frame. Just the bottom wick rejection and then flip as a confirmation.
Okay.
Alright, cool. So let's check out the next 4 minutes. So that's for GJ. I think we just went over gold as well. Does anyone have any questions about what to expect for the rest of the session?
Not me.
Okay, everyone knows what they're looking for?
Yes, ma'am.
And then, of course, feel free to message me, and I'd be more than happy to help out.
Sweet.
Alright, cool. So as we wait for some of these setups, we can create some alerts, which is right around this area for your buys. If you're gonna look for any sort of sells, I would do it right below this, just to give it enough room to break below the zone and then continuing. And like if it wants to fake out or anything like that, I would do like around 10 pips. Let's bring this down a little bit here. So those are for sells. Quick scalp buys would be above this. Go on to gold. I'm gonna set up some alerts right around this area here. It's the same thing, give price some room. Around 30 pips or so. And then for sells, I would do it right down here. So those are my alerts for both pairs. And I'm out of the market until one of them hits. But yeah. So that's my hour for the New York session. And then if you guys have any questions, feel free to reach out whenever. But I hope this was helpful. I'll see you guys tomorrow.
Thank you so much.
Thanks, DJ.
Yeah, and then if anyone on YouTube has any questions, then also, feel free to reach out. On Instagram,